The combination of strong crude oil flows from the Middle East, the operational capacity of Dangote Refinery in Nigeria, and the output from Mexico's OPEC refinery creates a significant shift in the global oil market landscape. Welcome to NaTV. In this video, we take a look at how Dangote Refinery is shaking up the global oil market and what this means for Nigeria and Africa. Before we proceed, please kindly subscribe to the channel and do not forget to share and like this video. Thanks. Dangote Refinery and its impact. With a daily capacity of 650,000 barrels.
650,000 barrels per day that we've done is the largest single train, not only in Africa, in the world, and we just wanted to make a point.
The Dangote Refinery is posing a threat to well-known oil suppliers in Europe and beyond. According to OPEC, its existence is already upending established supply and pricing trends, especially in the gas oil market in Northwest Europe. The refinery's ability to produce jet fuel and other refined products from locally sourced crude has enhanced Nigeria's energy independence while impacting crude flows into Europe. And before that, the refinery had partnered with Cameroon, Ghana, Angola, South Africa, Benin, and Burkina Faso to supply petrol and diesel.
Other matters now, Dangote Refinery has exported premium motor spirit to other African countries, including Angola, Ghana, South Africa, in the past few weeks.
The refinery also partnered with Singapore, which is a major oil trading hub in Asia and has been a primary destination for Dangote's fuel oil export, particularly low-sulfur straight-run (LSSR) fuel oil. Last year and early this year, the refinery went into partnership with the United States, Saudi Arabia, the Caribbean islands, and Europe to supply jet fuel, and has competed with European refiners for gasoline exports, including some diesel exports to Spain. Dangote Refinery's impact on Middle East crude flows. Strong crude supplies from the Middle East continue to dominate global oil supply, especially as OPEC members such as Saudi Arabia and Iraq maintain high production levels. This surge benefits Europe and other markets, particularly after disruptions caused by geopolitical conflicts or sanctions against other oil-producing nations. However, Dangote Refinery's presence in the Middle East has caused a shakeup in the region. Jet fuel exports to Saudi Arabia. According to OPEC, the Dangote Refinery has exported significant volumes of jet fuel, including multiple cargoes totaling around 130 million liters, to Saudi Arabia, specifically to Saudi Aramco, disrupting the direct trade relationship in the region and positioning the refinery as a new supplier in the Middle East's refined product market, potentially affecting regional refining dynamics. Shifting global trade patterns. By reducing Nigeria's dependence on imported refined products, especially from Europe, the Dangote Refinery contributes to a broader rerouting of global oil flows, which has indirectly impacted Middle Eastern crude exporters as traditional markets adjust their sourcing. While the Middle East itself is a major crude exporter, shifts in where refined products are consumed and produced can alter the overall supply-demand balance globally. Fuel oil exports to Asia, including Middle East Gulf. Dangote Refinery has shifted some of its fuel oil exports to east of Suez markets, including the Middle East Gulf. This increased supply of fuel oil is putting downward pressure on prices in those markets, affecting the revenue of Middle Eastern refiners and suppliers of similar products. Crude sourcing. While Dangote primarily processes Nigerian crude, it has also imported U.S. West Texas Intermediate crude due to domestic supply challenges. Analysts speculate that if Dangote were to diversify its crude slate further and potentially source from the Middle East in the future, it could create new demand for Middle Eastern crude, though this is not a significant trend currently. If you're still here, please like, share, and subscribe to the channel. Thanks. Dangote Refinery's impact on North America. Mexico's OPEC refinery, with a capacity of 340,000 barrels per day, adds to this dynamic. The refinery intends to minimize Mexico's dependency on foreign fuels by processing domestic crude. It aims to fill holes in the North American fuel industry, focusing on gasoline and diesel. However, now that the Dangote Refinery is supplying to some companies in this region, particularly in North America and the Caribbean, it is becoming competitive for Olmeca. Though Dangote and Olmeca are both huge new refineries, they will greatly increase the global supply of refined products. This spike in supply puts downward pressure on global refining margins. As a result, Olmeca, like other refiners, may experience decreased profitability or higher competition in export markets. Dangote Refinery is actively exporting jet fuel to the US and diesel petrol to other African countries and Europe. While Olmeca's primary goal is Mexican self-sufficiency, it has exported refined products like ULSD to the US and fuel oil to China, when domestic distribution infrastructure is lacking. Since Dangote supplies fuel oil to Singapore, who is an active supplier to China, this is also eating into Olmeca's market. But this is a good thing for the global fuel market. The combined output of Dangote and other new large refineries globally is expected to lead to the closure of older, less efficient refineries, particularly in Europe, and also put pressure on the supplying of clean, authentic fuel products to third world countries. Most Nigerians can attest to this, as not too long ago, poor fuel products were imported into the country, which led to the damage of many cars and factories.
Most of you have problems with their vehicles. Either you have had or you are still having problems with their vehicles. It's because of the bad fuel that we're importing into the country. I still stand by what I said.
If you're still here, please like, share, and subscribe to the channel. Thanks. What this means for Europe. Dangote's refinery has had a tremendous impact, selling about 90% of its 3.5 billion liters of jet fuel to Europe, a notable achievement for Nigeria's oil industry. The refinery's success, despite limited government support, demonstrates its capacity to operate effectively in a tough regulatory environment. Nigeria's oil export profile is improved by Dangote's refinery's entry into the European market, which also shows that domestic refining can prosper on its own. This milestone shows how the refinery's activities have persevered in the face of governmental obstacles, as well as the strategic vision that led to its development. According to OPEC, the strong Middle Eastern crude oil flows, the output of Mexico's Olmeca refinery, and the rise of Dangote Refinery all have a big influence on the European Union's prohibition on Russian fuel. The intersection of these developments is as follows. Supply diversification. Due to geopolitical tensions, the EU banned Russian oil products, which has resulted in a significant supply gap that Dangote and Olmeca can help close. With Olmeca focusing on the North American and European markets and Dangote's refinery producing refined products like diesel and jet fuel, the EU can lessen its dependency on Russian fuel and diversify its supply sources. Market competition and pricing. Dangote and Olmeca's flood of quality products may increase competition in the European market and result in reduced prices. This is especially important as European nations work to lessen the negative economic effects of the Russian fuel prohibition. According to OPEC, the increased output from these refineries will probably have an impact on European supply dynamics and price policies. Strategic energy transition. As demonstrated by Dangote and Olmeca, the move towards more regional and varied energy sources is consistent with the EU's long-term plan to wean itself off of fossil fuels and improve energy security. Nigeria and Mexico are establishing themselves as dependable energy partners by increasing their domestic refining capacities, which will support the EU's transition initiatives. Companies Dangote Refinery has partnered with. Some of the companies in these regions that Dangote Refinery has partnered with are Premier Product Marketing LLC, a U.S. subsidiary of Vinmar International LLC, exclusive partnership for global export of polypropylene products outside Nigeria and Africa. Vinmar International LLC, parent company of Premier Product Marketing LLC for polypropylene distribution. INEOS for Innovine technology used in polypropylene production. Saudi Aramco for direct sales of jet fuel. MOCO, a Swiss-based oil trader, partnering to export surplus fuel to regional markets like Benin, Cameroon, and Burkina Faso. Vitol, BP, Trafigura, identified as major trading firms favored by Dangote for significant offtake deals. Total Energies, a potential deal could see Total Energies taking refined products for its African network and supplying crude to the refinery. And that's all the reporting we could cover on the topic based on OPEC analysis and speculations. Even with all the oil heavyweights under Dangote's belt, the refinery is still expanding its reach, looking to partner with more countries for future sales,